Good morning, everyone, and welcome to the Quantum Leap homework session pre-market for Tuesday, February 4th, 2014. Of course, if you're visiting us from Twitter or watching this video on YouTube, Quantum Leap is a self-organized learning environment, or what we call a SOL. We've been around for over 4 years. We started a private Skype room way back then. And if you're interested in coming in and checking out our chat room, which runs basically 24 hours and is just a group of traders that get together to talk about the market and talk about their trading. And then each morning we come together to do this homework session to set our trade levels up and go through what our hypotheses are in terms of mine and Howard's, and share them with the room. Of course, I am Doug McKay. I am the head moderator and founder of Quantum Leap. If you're interested in checking out the room or you want more information, please feel free to contact me at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. If you're watching this video on YouTube, we go through a morning routine that involves looking at the macro to micro key numbers, looking at the macro to micro trend, just to get ourselves prepared, put ourselves within the context of the current market. So if you're looking for in-depth chart analysis, you might want to skip ahead on the video just a few minutes, because we do not shortcut our routines. There are no shortcuts in trading. We need to get the legals out, so let's do that. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument that involves the risk of loss, please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, do your own due diligence. Okay, with that, let's go to the sheet, take a look at what's going on. Of course, our year open, still way below it. We have a bearish year going on, people, so far. We haven't been able to maintain above 1837.75. Our year high is currently 1845.75, just below last month's high, and December's. Now we're into February. I got to think about that for a minute. December's all-time high up at 1846.50. So we are seeing some definitive weakness coming into the marketplace. We do have a new low of the year, and lo and behold, what was that low? 1732.25, one tick below our extended target and expected rotation once we broke below 46. All our monthly numbers are starting to come down, and they're lower. Previous week numbers are lower. So you're seeing some weakness coming into this marketplace. Looking at the intraday key numbers, yesterday we opened at 1777.50 in the Globex. The Globex high was 1783.75. It actually looked like they were going to show some strength into the marketplace going into the RTH. Of course, our low was 1771.50, which was our main target below on the open, and then the RTH opened at 1774.75. So we opened the auction in range and went up and tried to go up and take out the overnight high. We failed to do so, and that naked VPOC that we have up there at 1779 initial balance high, we sold off from there, and it was no looking back. They just took it down all day. Opening swing 76.75, high 74.25 low. Big thing yesterday was this initial balance, one of the largest initial balances that we have seen in a long time. And you can see we're starting to see all the intraday numbers coming down and are lower. So 1230 number was lower, 1741.50. All numbers are in Central Time in Quantum Leap, by the way. The RTH high was lower. The low was lower. Put in our new year low yesterday. Our RTH close was lower, and of course our VPOC was lower as well. And we did have one of the largest ranges that we've seen in over 15 months or 18 months, thereabouts, I think. So, that 5150 is one of the largest ranges that we've seen, currently, just, above these 2 days back in the end of January, where we had that big, those 2 big days where we went down and then we rotated back up. So we are getting some expansion within our 20-day ATRs. You can see that the RTH has expanded to just above 16 and a half. Full session just below 2175, and the Globex just above. The Globex is really starting to get active again, and I'm actually thinking to start doing some more trading in the Globex with this expanded. I mean, it's impossible trying to trade the Globex when you're averaging a 6 to 7 to 8 point range, but when they start expanding out to 11, 12, or 13 points, then it becomes interesting again. So our value areas were lower. Our value area high 57.75. Our value area low 17.33.75 for a 24-point value area. Very big. And then our initial balance break study, you can see again, we're breaking the IB, outside of the regular pocket. We've been keeping this time study and initial balance break, and the highest percentage of IBs get broken within the first 15 minutes after it's set, and the second highest is the second 15 minutes after the IB, and you can see we're breaking in that secondary or outside that secondary pocket. Lower ETH numbers, high volume. Not unusual when you get a big down day to see a lot of fear come into this marketplace. The the VIX jumped up to over 20 points yesterday. So the volatility is definitely there. There is fear in this marketplace. Going over to the daily report. We put this homework sheet together, and the end result for the homework sheet is 2 sheets. One that we call the Quantum Leap Trade Tracker, and the extended trade tracker, or trade sheet, I should say. The QLTP is what we call it. And basically, it's a ladder below and above the previous day close, and then we have an extended sheet when we get big ranges like we did yesterday. And what this is all of the key levels that we're looking at and the different methodologies, everything from volume profile, Fibonacci, moving averages, floor pivots, support and resistance lines, some proprietary studies like our naked cross, and our key numbers. They're all listed here to show you where different traders might activate and find value. And we think very much in terms of the auction logic in Quantum Leap, and we want to know where others are going to find value and activate and make sure that we're not trying to enter a trade in front of a possible bus and get run over. No big news today. We've got factory orders, and we've got economic optimism coming up at 9 o'clock. So first half hour of the trading, be careful, although I'm not expecting a huge reaction. I mean, we got a big move yesterday. I think we're in for a bit of a inside day. Currently, right now, I believe the high hasn't changed. Let me check, because we were moving up. It did change, so it's 46. So we're expanding our Globex range out slightly. So let me just make a change here. So based on our average true range, 20-day average true range, the full session ATR targets, now this could expand because we're going up and making new highs, but the full session high is showing 17.54 1/4 as your ATR target, and then the low is showing 17.24 1/4. And of course, we'll put in our RTH numbers and factor those in once the market opens up and expand any of the numbers that we need to. So with that, looking at the key numbers, let's go over and take a look at the macro to micro on the trend. We talked about this little technical gap that was being created on the monthly, and the fact that we had broken below the prior month low at 54, and that we are likely to come down and test the 9 EMA, and we still have room to come down into that 22, 23 area, which is going to be a key line in the sand for me, because below that, then we're starting to violate the overall monthly trend or the macro. We're losing some slope, but we do have good separation, and there's still a good possibility that we bounce off of this 9 EMA and go back higher. If we get below it, then I'd be looking for a larger retracement, okay? But the overall monthly trend really doesn't get broken, okay, until we get a much bigger move down. So on the macro, the trend is still intact and still strong, but showing a bit of weakness. On the weekly, well, the weekly is starting to show further weakness. We have, came down, closed below the 9 EMA 2 weeks ago. Last week we tried to break below the 20 SMA, but we held and we closed above it. But so far this week we've come down very strong, and we're trading below the 9 and the 20, and we've lost slope and separation. So the trend has definitely started to turn on the weekly. On the daily, well, we've got this big technical gap right now on the daily. So, whoops, sorry, just trying to get some of these lines off my chart so they're less confusing. So we had a big technical gap on that first move down, okay, and then so we consolidated and moved back up and closed the technical gap. A technical gap is when price action moves definitively away from the 9 EMA too quickly, too fast, and it has a tendency to always close the gap. It'll close the gap through either time or through price. Usually it's a combination of both, but the gap will get closed. And you can see we've created a big gap. We've got a potential tech gap, foo-bar, Mr. Sneaky setup here. So I'm anticipating either consolidation here and a slight move up, or a strong move up to close this gap. And this is, of course, everybody knows me, this is one of my favorite setups, which is a tech gap, Mr. Sneaky, with a foo-bar. And I won't get into what that all entails. It's a funny little name, but it's a great little trade. So we do see weakness. We've got slope and separation to the downside, but we have made a strong move down, and we're likely to come back. The 50% retracement of the significant breakout candle will bring us all the way back to 1755.75, which was the midpoint of the RTH session yesterday. So mark that on your charts as a possible rotation. Taking a look at the geometric chart yesterday, we talked about the fact that we were below and the center line of the downward sloping fork, and we had broken out of the long-term upward sloping fork, the lower line, and we talked about if we had further weakness that we'd look for them to come down and test the lower line of the downward sloping fork, which they didn't quite get to. There is a naked VPOC down there at 27. We are looking for a move down to that 32 area. We got the move to 32. So we still have some potential to come down and test this lower line, and that will take us down to take out that naked VPOC down there at 27. We'll take a look at that when we get to the intraday chart. So we do have potential to go down, and if we break below it, we've got a key level below us, which is that 1723.50 CLDN that I've got my eye on, which is really becoming my new line in the sand for more weakness below. If we move higher and come up to test the center line and close the technical gap, a move to test the center line, and the EMA right now is going to be somewhere in around that 1777, 1775 level. We do have some energy points above us, so I mean, you never know. I think there's a lot more weakness, and these are the type of down move days that have a tendency to show some continuation after a little bit of consolidation. So whether or not we come up and this energy point right here up at this 1824 isn't due till the 10th. So we do have some time to do some retracements, and based on the daily ATR target or ATR range right now, we certainly do have the capabilities of coming up and testing these energy points, but nothing is certain in life. Going over, I just want to take a quick look at the smaller time frames, see where we are coming into the RTH session. We know where we are within the trends on the bigger. You can see we had here, this is a beautiful tech gap foo-bar Mr. Sneaky. So you got the tech gap, you've got the foo-bar with the high volume coming in, and then you've got the inside Mr. Sneaky, and this is turning out to be a tech gap fill with a combination of both price and time, and a current close of the gap will take us back up to 1749 and a quarter area, 1749. But we do have slope and separation to the downside, so the trend in the 4 hour is still weak. Going down to the 30-minute, that changes things just slightly. In the smaller time frame, the intraday time frame, we've closed back up above the 9 EMA and the 20 SMA, and we're starting to get a little bit of slope, a little bit of separation. So coming into the RTH session, we're seeing some support down here and a possible move up into the RTH. Same thing on the 15-minute. We do have a naked cross right here at 1740 and a quarter. So keep an eye on that. We have these naked crosses. We just took out a whole bunch of them on the way down to that 1732.25, and why I love to watch that. If you're not following the naked crosses, do your own studies, but they have a very high probability. And the naked cross is where the 9 EMA, I use the 9 EMA, crosses over the 20 SMA, and price action moves away from that. It leaves this cross, okay, where the two lines cross, naked or unauctioned, or a place where it needs to be repaired. And if you go through your charts, you'll find that we follow them and trade them intraday on the 5, the 15-minute, and the 30-minute, and we look for them as targets, areas to rotate back to, and they have a very high probability of being taken out. So the trend is showing up. We've got a bit of a tech gap here on the 15-minute, so likely, we could see a little bit of weakness coming into the marketplace, maybe a test down to that 742, 741 and a quarter area by the time we get there. But the trend is starting the morning session, with a little bit of support and a little bit of up move. So let's take a look at the macro picture. Of course, our big target yesterday below, we had two of them. We had the 1752, then the other side of that balance at 46, and the big one down here at 1732.50, and we went down and one ticked it with the low at 1732.25, which is the new low of the year. I didn't do any trading in the afternoon because we made decent trades in the morning, so I took the afternoon off, but this would have been a beautiful, this is the one context, and I always talk about the fact that I don't like to trade from balance out, but when you get these big moves with extended and OTF participation, they blew through these primary areas very readily, and make a big move like that. This is anybody that was looking to get long, and I know a couple people in the Quantum Leap room got long at 1732.50 area, and it would have been a nice rotation up with the the high overnight being up at that 46. But that is one situation or context where I would take an entry from a area of balance like this. But as I mentioned, the last couple days. We were looking at that 64 as the main line in the sand, and I kept on saying all last week, And coming into this week, if we get below 64, sell till your fingers bleed, because we're likely to go down, and you got a good opportunity to get funded into that 61.25. Now the problem we have with this area here is this has got a lot of undetermined fair value. There's, you can see when we traded back in this area, there was a lot of whippiness. This was really tough trading back then, and now we're back down in this area, and we've got all these areas of price acceptance from the last time we were down auctioning this territory. The main ones being, this 50 area, 52.25, the 42.50 area, 43, and then the 32 area. But there's a lot in betweens, and I think that we're going to get some consolidation in this area, and it's going to get really choppy in here. And you really don't have anything really strong to lean against. So I'm looking at the three levels that I think are key to lean against. It's this 46 CLVN. It's just below the value area low of this microcomposite that runs from the October the 25th through to the 13th of November. So the value area low is just above the 46 CLVN at 46.75. So I'll be using this 46 to 47 area as an area to do business, but it's still a bit weak. So I've got to be very careful and know that I'm wrong very quickly, and really put it more into context against the daily versus the composite or the microcomposite. But if we get above 46, then we're getting inside of value again, and we're likely to get the rotation back up through to 52, and probably go up and test that halfback of the significant breakout candle, which is up at 55.75, which is basically right up here at that CHVN at 55.25. Value area high in this area is up at 61, and we had a prior microcomposite VPOC just before we launched to break out and create this upper distribution up around 32 at 61.50. So if they get any push through, if the responsive sellers don't step in here at 52, then I anticipate a rotation continuation through to the value area high and at 61.50 former microcomposite VPOC, with a possible push through to test the range low of the distribution, the 5-day distribution that we just fell out of, and test this very key CLVN. The big number below is all the way down here at 23.50. This is an area that has, it's a gap area. We still have the open gap down at 22.25, and we've got no auction in between basically 22.25 and this 24 area. So this is going to be my new line in the sand for shorts. I think we rotate in this area back and forth. I think it's going to be very choppy, very tough to trade, so be careful this week. But if we get below 23.50, then we've got two key levels to watch below. You've got 17.11.50 and 17.06.75 with the other side of that distribution, and the centennial number, and what I think is going to be a very psychologically big number at 1,700. Now, I don't think it's going to happen anytime soon, but I always like to start thinking ahead. And what are the probable rotations down to pick up buyers? Well, we got a very, very key level below us. If we get below 1,700, we've got a couple key levels, the 89.25, but the big one, and I mean it's a big one, and if we get below 1,700, I would look at this to become a very big magnet, because this is the composite VPOC. So going back to the beginning of 2013 all the way through to today, this is the most traded price. So if if they get below 1,700, this is going to be the natural destination for them to come down and find buyers with any conviction. So it's likely to be the magnet as we come down and get below that 1700. Just not looking at it to happen right away, but it's something to think about, because as we get close to these composite VPOCs, they start tugging us towards them. But again, my main hypothesis is just chop in this distribution zone. So let's take a look at what that looks like and what the possible areas of trading can be. Of course, we've got the overnight high right now at 46. Come on. And we have our overnight low down at 32.50, just one tick off the range low from yesterday. Of course, the value area low from yesterday is this 33.75, and the value area high is this 57.75. And our VPOC from yesterday is 36.75, and currently our VPOC overnight, and I don't think it's going to change, is 39.75. So we have this 46 level, which is the overnight high, and is the, let me just get rid of this now and bring this down, which is right there at that CLVN and the value area low. So this is going to be an area that I'm going to be looking to do business between this 46 and 47. So basically just put it in here at 46.50, and I'm looking for us to take out the overnight high, possibly find responsive buyers or sellers here, and then rotate us back down into this lower distribution, take out the naked VPOC. Our naked close is at 17.33, so you've got the naked VPOC and the naked close, and a test of the value area low at 33.75, and then of course you've got the range low and the overnight low in that former microcomposite VPOC down here at 32.50. So my other secondary area to do business is going to be right here at the value area low at 34. I'll look for responsive buyers to step in there, but if they don't step in there, then I'm looking for a break and a takeout of the overnight low, and my first target below is going to be this naked VPOC down here at 27.75, with the secondary target being this naked close at 22.25. Now, this happens to be right there at, come on, just I don't know why this does this sometimes, but it doesn't like to draw it for me. All right, so that 23.50 area is a key area, but if we come down to test it, I'm anticipating that they're going to push through, and it's really the 22.25 that is where I anticipate them to, between that 23.50 and 22.25 is where I expect some responsive buyers and some support to come in to hold us inside of this distribution and keep us above. Of course, if we break below us, then, and by the way, remember the full session ATR target is 22.75, so that puts us right in line for this area. So we're within the range right now. The extended target, there's going to be two of them. It's going to be the 16.25. I got to get another button for extended targets. And the secondary one is going to be that 17.11, which is all the way down here. And I'm just running out of time here, so I'm just going to put it in there with the 17.06 75. Now that's going to be a target, but it's also going to be an area that I'd be looking to take a long from, because I'm anticipating a move, for buyers with some conviction to step into the 1706.75 and hold us, above the 1700 with possible push through to the 1700. But, below the 22, this is really, my main hypothesis is to stay within this section. And I'm not going to try to tell you, if I think it's going to be weak or I think it's going to be a strong move back up to 1757.25, because quite frankly, in this area, it's hard to tell because there's so much stuff here. But if we do get above 56, right now I'm looking, my main hypothesis is to come up, take out the overnight high, test this 46, fail, and rotate back through to test that 32 level again with, the probability of them holding, and if they can't hold, a push through to the 23 area with these targets in between. That's my main hypothesis. My secondary hypothesis is that we come up, we take out the overnight high, and we break above the 46, and we rotate back up towards what will be my main target above, which is going to be that 52.25. Come on. Okay, and if we get through that, a push through to take out the 50% retracement level and test the value area high. So that will be an area that I'll be looking for responsive buyers or sellers to step in and hold us in this middle distribution as we repair this area and start defining this distribution zone more thoroughly. And then if we break out of value, then I'm looking for a move up to that 61.25, and that is going to be my target above. And then with the that 1774 area, well, we've got the 64 area, of course, which is a key level, which is that line in the sand that we broke to the downside. It's actually 64.25, and it's that range high at 64.75 from the other day. And then above that, the key level is 74. And we've got an extended target up here in the range high and the naked VPOC that they missed by 2 ticks up here at 79. And I'm not anticipating much more than a move up there. But again, I'm anticipating a main hypo being a lot of chop right here. And Howard, I know I just blew through all your time, so I just got a lot to cover because we're in new territory. Looking at the Keltner channel, we've got a test of the lower Keltner here at 42. Test of the upper Keltner will take us up to that 1748, and of course, test that key level between 46 and 47, and the test of the lower Keltner will take us down to 36 and take out the naked VPOC and probably come down and take out the naked close and test the range low and that microcomposite below. Take a quick look at gold. Gold's still consolidating in this area, and it really doesn't change much. So the current microcomposite VPOC is still down at the 1242 area. I'd be using this 1249, 1250 area as a key area to trade off of. Above that, you want to look for a rotation up to test the 55 and that 57, 58 area with the same numbers. We keep talking about the same things over and over again right now. 65, 72, 74, and 82 above. And then if we get below that level, look for rotation back to the 42, a test of that 37, and then if we break that 37, this time I don't think we'll hold. I'll think we'll come down. First target is the 32.90, but the big target below is that 12.26, and with the extended target being down there to come down, test the lower 1200s and get back down into that 1203.30 area, which was that'll be a return to the scene of the crime, because that's where we came. We started this whole full move up, and then we came down and held before moving back up. Now, I do want to point out one thing really quickly, and again, I apologize that I'm taking so long today. I've got a little bit long-winded. So if you take a look at, again, gold. Gold is at a very key spot right here. This is a long-term descending broadening wedge. These are, generally very reliable trade patterns, and if we break and hold, we've been testing it. The upper trend line, we've been testing it and struggling to get above it. But if we can get above it and hold, then I think we see a much bigger move in gold, because these are generally, bottoming patterns, and you can see that we've also got a symmetrical or a triangle, asymmetrical, and we're breaching the upper line of it as well as this bigger trend line. So they're struggling to get there, but I think that if we can get above, we're going to see a really nice move in gold, and I'll be looking to get into a swing position long on gold for a what could be a very big move in gold, prolonged bull run on gold. So Howard, I'm sorry, I know you it's your birthday, so I'm just going to let you take the day off and apologize to you for taking your time. But with this new territory, we had lots to talk about. This is going to complete our homework session for January the 4th, 2014. As always, trade well, trade safe, and we'll catch you on the flip side. And I'll go